Hello everyone, this is Sihan from the Research and Development Department in Market Equity, and in this video I'm going to be talking about some of the important pairs and their price movement predictions for the day, which is a Monday, 10th of January 2022. Let's begin with the US dollar versus the Japanese yen, where in the previous videos we said that the pair is moving in an uptrend in the 4-hour time frame as well as the daily time frame, and upon rebounding down off of around level 116.20, in order to correct, we said that it is expected to retest around level 115.65 before continuing with the uptrend. Recently, we can see that the pair has broken down through level 115.65 and instead reached around level 115.50 and rebounded upwards off of it after failing to hold below level 115.65, which supports the continuity of the uptrend and the targeting of around level 116.20, then around level 116.85 as primary targets in the uptrend. And if we notice the 1-hour time frame, we can see that it has recently formed a falling wedge, which supports the probability of breaking upwards to the upper boundary of it in the 1-hour time frame, which in turn, as we said, will support the continuity of the uptrend as well as the targeting of around level 116.20, then level 116.85. If we notice the RSI indicator in the 4-hour time frame, then we can see that due to the rebounding up off of around level 40, it supports the continuity of the uptrend in the 4-hour time frame. That was it for the US dollar versus the Japanese yen. Let's move on to the Australian dollar versus the US dollar. In the previous videos, we said that the pair has started a downtrend in the 4-hour time frame as a continuity to the bigger downtrend in the daily time frame upon breaking down through level 0.7185, which resembles both a horizontal support level for the pair in the 4-hour time frame as well as around the lower boundary of the rising wedge that was previously formed, and the pair continued to reach around level 0.7130, where it then rebounded upwards off of it in order to correct towards around level 0.7185, and therefore it is currently expected to rebound down off of around the current levels in order to continue with the downtrend, which in that case it will continue to target around level 0.7130 once again, then around level 0.7090 as primary targets in the current downtrend in the 4-hour time frame. If we notice the RSI indicator in the 4-hour time frame, then we can see that due to the indicator moving around level 50 near the downtrend line that it has formed, it supports the probability of rebounding down off of around the current levels in order to continue with the overall downtrend. That was it for the Australian dollar versus the US dollar. Let's move on to the US dollar versus the Canadian dollar. In the 4-hour time frame as well as the 1-hour time frame, we can see that the pair is moving in a downtrend where it is currently being traded around level 1.2630, which resembles both a horizontal support level for the pair in the 4-hour time frame as well as the neckline to the head and shoulders pattern that the pair has formed, and therefore by breaking downwards to this level it will support the probability of a bigger and deeper downtrend in the 4-hour time frame, which in that case will extend to target around level 1.2490, then around level 1.2390 as primary targets in the downtrend. If we notice the RSI indicator in the 4-hour time frame, then we can see that due to the indicator moving around level 30 near the oversold area, it supports the probability of rebounding upwards off of around the current levels in order to correct before continuing with the downtrend. That was it for the US dollar versus the Canadian dollar. Market Equity wishes you successful trading. Thank you for watching and have a nice day.